Globally, the world is struggling. The US is probably an exception, but just about every central bank this year is going to be cutting rates. In Australia, obviously, cost of living is a big issue. We've got interest rates that have gone up. We think they're peaked, but we're also seeing a consumer struggling, not just in the mortgage market, but also at the bottom end of the income distribution. Particularly, we see people with stress in rents. On property, it's an interesting market. What we're seeing is quite a strong demand. There's also an element, I think, of distressed sales, and we're seeing a lot more people coming to market in terms of auctions. We expect to see house prices around about 5% up. At this stage, it's still very different according to which city. So roughly Melbourne, Hobart, sort of going backwards. Sydney looks like it's going sideways. Perth, Adelaide and Brisbane very strong. But broadly, we think it's going to be flattening out more to around about a 5% increase, and then essentially something similar in 25. This is a policy-induced slowdown. It does hurt. It will continue to hurt for a while. But by 25, we'll have inflation back into target. We'll have growth around 4%, and we'll have an unemployment rate below 5. Very few countries in the world will have that. So the medium term, I'm quite optimistic. But in the near term, we're just sort of going through the process that the Reserve Bank and the government has decided in terms of slowing the economy. I think it's important to understand a third of Australia rent, they're doing it really tough. A third have mortgage, they're obviously under stress, and a third own their own homes essentially. And so that part of the market is still very strong. I think the outlook is going to continue to be quite good. And we see a lot of money in terms of high net worth, people that are cashed up waiting to see what opportunities they might get as they go forward.